Imagine combining the explosive potential of Bitcoin with a steady, high-yield income stream. In today's video, we'll unveil how you can generate over 30% yield while gaining exposure to one of the most revolutionary assets of our time. But here's the twist. We're not just talking about owning Bitcoin. We're diving into a unique strategy that merges Bitcoin's growth with income generation to help you achieve financial freedom faster. Stick around to learn how this strategy works and whether it fits your path to early retirement. Let's break it down. Part 1. What is Bitcoin? Bitcoin is a decentralized digital currency that operates without the need for a central authority, like a bank or government. Think of it as digital cash that you can send anywhere in the world instantly and securely. Every transaction is recorded on a public ledger called the blockchain, which ensures transparency and prevents tampering. Here's an example to better understand. Imagine sending money to a friend across the globe. Traditional systems might charge high fees and take days. With Bitcoin, you can send it instantly with minimal cost and no intermediaries involved. Bitcoin has redefined how we think about money. It offers a hedge against inflation, financial inclusion for the unbanked, and a secure way to store value. That's why institutional investors and even some countries are embracing it. With limited supply, only 21 million Bitcoins will ever exist. It holds the potential for significant long-term value appreciation. Why the hype? Well, big players like BlackRock and Fidelity are exploring Bitcoin ETFs. Countries like El Salvador are using it as legal tender. This isn't just a trend, it's a financial revolution. Part 2. Introducing YBTC, the Bitcoin Covered Call ETF. Now let's talk about YBTC, the Roundhill Bitcoin Covered Call Strategy ETF. This ETF is a game changer for income-focused investors looking to tap into Bitcoin's potential. What is YBTC? YBTC is the first US-listed Bitcoin Covered Call ETF. Instead of directly holding Bitcoin, it invests in Bitcoin ETFs and uses a covered call strategy. So how does it work? It uses a covered call strategy. The fund sells call options on Bitcoin ETFs, generating income from the premiums. While this caps the upside potential, it provides a consistent, high-yield income stream. It offers a high yield. As of now, YBTC boasts an eye-popping distribution rate of 40.75% paid weekly. This income can be life-changing for anyone needing steady cash flow. All right, now who is YBTC for? YBTC is ideal for income-oriented investors who value consistent cash flow over capital appreciation, are willing to trade Bitcoin's explosive growth potential for high yields, seek exposure to Bitcoin without the complexities of directly trading options. And why does it matter? The yield generated by YBTC can serve as a powerful income stream to fund your retirement, pay off debts, or reinvest for compounding gains. It's a strategy that aligns with financial freedom goals by turning a volatile asset into a reliable source of income. Part 3. YBTC versus IBIT, a comparison. To understand YBTC better, let's compare it to IBIT, the iShares Bitcoin Trust ETF, which offers direct exposure to Bitcoin. First, let's see the growth of $10,000 with dividends reinvested. Starting on January 18, 2024, a $10,000 investment in YBTC bought 206.02 shares at $48.54 per share. By December 17, 2024, the share price had grown to $56.85 and dividends totaling $20.52 per share were reinvested. This increased the number of shares to 308.72, resulting in an ending investment value of $17,550. YBTC delivered a total return of 75.50% and an annualized gain of 82.51%. In contrast, the same $10,000 investment in IBIT bought 428.45 shares at $23.34 per share. By December 17, 2024, the share price had surged to $60.73. Without dividends to reinvest, the ending value was $26,020. IBIT achieved a total return of 160.20% and an annualized gain of 175.07%. Now let's take a look at the growth of $10,000 without dividends reinvested. For YBTC, without reinvesting dividends, the $10,000 investment grew to $15,938 by the end of the period. The share price increased from 48.54 to 56.85, and dividends of $20.52 per share were collected. This resulted in a total return of 59.38% and an annualized gain of 64.90%. Meanwhile, IBIT, with no dividends paid, maintained the same growth as before, reaching $26,020. The total return and annualized gain remained at 160.20% and 175.07% respectively. Here are the key takeaways. 1. YBTC generates high weekly income, but caps growth potential, ideal for income-focused strategies. 2. IBIT delivers full upside of Bitcoin's price movements, but no income. Best for growth-focused investors. So for a $10,000 investment, YBTC with dividends reinvested grows to $17,550 in under a year. On the other hand, IBIT without any dividends grows to $26,020 over the same period. While IBIT offers higher growth, YBTC's income potential can be transformational, especially for those prioritizing cash flow over capital gains. This strategy isn't just about numbers, it's about taking control of your financial future. Whether you're saving for retirement, building wealth, or seeking financial independence, YBTC provides a tool that blends innovation with stability. Remember, investing is personal. There's no one-size-fits-all approach, so find the strategy that aligns with your goals. What do you think of YBTC? Does this kind of high-yield strategy fit into your path to financial freedom? Or do you prefer the growth potential of something like IBIT? Let me know in the comments. And if you found other unique strategies, I'd love to hear about them too. All investments carry risk. Always consult with a financial professional to determine what works best for your needs and goals. If you enjoyed this breakdown and want more videos about high dividend opportunities and financial freedom strategies, hit that subscribe button and turn on notifications. Let's explore the best paths to early retirement together. Stay informed, stay invested, and keep exploring those dividends.